Hello everyone, welcome to Ordinary Guy Finance. Make complex finance terms simple. All right, let's start. Today we're going to talk about how to pick stocks in the Indian stock market. Just a disclaimer, I'm not a financial expert, but I've been investing in the stock market for the past 10 years. So I just want to share my thoughts without the financial jargon. I hope this would help all of you. All right, so just remember, you don't have to invest in each one of the stock out there. All you have to do is avoid as many as possible. Just imagine that you are MS Dhoni walking into the stadium. People would want you to hit every ball out of the park. But as Dhoni, you would know, you don't have to do that. You just have to wait for the right opportunity, pick the bowler, and then smack it out of the park. Similarly, even in investing, you have to pick your right stocks and then invest for 5 to 10 years and then wait for your money to grow exponentially. All right. Today, I'm going to talk about the metrics that I consider for investing. I'm going to also show you how I generally filter out the stocks with a live example. All right. These are the important metrics that I consider before filtering out the stocks. The quantitative metrics and the qualitative both are really important. Coming to the quantitative metrics first, revenue growth. I would look at the past 5 to 10 years, see how the revenue is growing. And then the second important one is the debt. If the company has high debt, I would generally avoid it. So if the debt to equity ratio is less than 0.3 or 0.4, then I would say it's really good. And then the next metric, cash from operating activity. This is also really important. That would tell you how much cash are they generating for their main business activity. And then the free cash flow. After all the expenses, how much is the cash is the company left with? And then the return on capital employed, the last metric, but the important one. That will tell you for each rupee that they have spent, how much is the how much percentage of the money that they're getting back. All right. And then along with the quantitative metrics, you also have to look at the qualitative metrics. These are really important. Coming to the quality of the management, that's you have to research, like search in the news to see if there's any abnormal activity that's going on, and what are the growth prospects of the industry and then of the company. You have to have a general idea about it. Similarly, I wouldn't look at the high market cap. Similarly, I wouldn't look at the the low market cap companies. I would say somewhere around more than 1,000 crores to 1 lakh crore. I would look at that range to find out the best companies. As I told you, I would also show you next how in a live demo how I generally filter out these stocks. Let's do it. Let me show you how I generally do it with the help of the screener.in website. Go to screener.in. This is a free version. With the free version, you can access all the screens that are required. But there's a paid version also. But I'm not anyway affiliated with the website. Okay, let's click on the screens. Create new screen. So this is where you can put in all the filters that we have discussed, all the quantitative ones. Okay, let's go one by one. First is the sales growth. I would generally look at 5 years. If it's more than 15%, I would be very happy. Add and then the next one is ROCE, return on capital employed, for the last 5 years. Let's say if it's more than 20, that's really great. But let's see how many companies will have more than 20%. And then the next one is the debt. I would say less than 0.1. But as I mentioned, you can even include 0.3. That's fine. But I'm a little bit risk averse, so I would put 0.1. And as I mentioned, I would look at companies which have more than market cap of 1,000 crore. All right. And the other ones like free cash flow and cash from operating activity, I would show you once I click on, one company at a time. All right, let's run this query. So if you see here, there are 17 companies, that fits our filter criteria. And then if you want to dig further down and see, which companies that you need to invest in, then you can, let's say, for example, you take Dr. Lal Path Labs. You click on that. And then, okay, see, if you see here, this is one of the major red flag that I see already. It's PE, price to earnings ratio. For every 1 rupee of company's earnings, how much are you willing to pay? So the people are willing to pay 94 rupees. This is like very high. But you also have to remember, in India, quality companies are very less. So for the quality companies, people are willing to pay a very high price. All right. If it's around 40 to 50, I would be very comfortable with it, because if it's a really good company, the numbers are good, management is good, right? If you scroll down, at a quick glance, it will show you what are the advantages and disadvantages of this company. And then if you scroll down further, in a quick snapshot, it will show you the compounded sales growth, profit growth, return on equity for the past 3 years, 5 years. These numbers are really good. And then, except this, I think because of COVID, the last, trailing 12 months numbers are not that great. But as a long-term investor, you don't really have to worry about the last, 6 months, last 1 year. All you have to look at is how the company is going to do in the next 5 years, 10 years. Scroll down further. This is the one that I was talking about, cash from operating activity. Right? How much is the cash that they're generating for them from their main business activity? If you see here, from the past 10 years, it's growing at a good pace the last 10 years. Similarly, net cash flow is also good. Their return on capital employed, if you see here, the minimum that they've got is 32%. It's really great. If it's about 20, I would consider it's really great, right? Shareholding pattern, promoter holding is really great, around 55%. All right. So if the numbers are great, then what would you do? You go to the qualitative ones. Before you do any research, I would recommend search for their annual report. So I would recommend at least read their last 2 annual reports. And if you're kind of a person, you don't want to read, the complete report, at least read the management discussion and analysis. So at least that part, maybe, so if you see here, it'll be like 4 or 5 pages. That'll tell you how the industry is doing, how the company is doing, what are their plans, and at least read the last 2 annual reports. See, I would recommend, don't invest in any company if you don't understand it. Let's say if you're not able to understand the chemicals, but if the chemical companies are doing really great, don't worry about it. If you really understand only finance, IT companies, just invest only in those companies. Invest in only those companies that you really understand. All right. This is how I pick the companies. After my research, I finalize this company and then put it on my watch list. And then I watch it. I check the news, watch it for another 1-2 weeks. And then I slowly start adding, money into that stock. I hope this is useful for all of you. And, if you like it, please subscribe and support me. Thank you.